Hi, welcome to Neppy in Affairs. So over 10 years ago, I decided to buy REA Group. At the time, it did look fairly expensive, but I thought, even though it's expensive, I'll just buy a little bit of shares and see what happens. And of course, since then, the share price just kept on going up and up and up. And as it kept on going up and up and up, the finances improved as well to justify the valuation at the time I bought it. Now, recently I decided to sell out of the company. So I'll talk about why I decided to sell out. And the question is, was it a mistake? Now, I do have a philosophy and a motto: never regret any of the decisions when it comes to investing. Learn from them, but don't regret. So this is probably a case where it could be a mistake, but if it is a mistake, I will learn from it, but I will not regret it. So apart from me selling out of REA Group, one of the reasons I wanted to do this video was the company did release their half-year results on the 5th of February 2021. So REA Group's ticker code, of course, is REA. And the market cap is $21.4 billion. Now, in isolation, who knows if that means a company's expensive or not. But when you look at the trailing 12 months of revenue and operating cash flow, I think it'd be hard-pressed for me to argue against the fact that they are overvalued or the valuation is quite rich right now. So revenue is at 877 million. So they are about we'll say 25 times sales, and operating cash flow at 382 million, which means they are roughly 50 times operating cash flow. And in my books, that is quite a rich valuation, even for a tech company like REA Group. Now, you could argue with me that the growth rate of the company justifies the rich valuation we're seeing currently in the share price. So, of course, naturally, I would want to see proof that the growth rate of the company is justifying the rich valuation. So I went back through the financials, going back to 2003, half-yearly financials here, and what I've graphed here is the revenue, which is the blue bars, operating cash flow, which is that black line or the dark line, and the market cap, which is that red line. And we have seen the revenue, the operating cash flow growing over the past 18 years or so. But if you can see the blue bars, the revenue has been leveling off over the past, say, 4 years or so. And in fact, the operating cash flow numbers we saw in the most recent half year is the lowest numbers we've seen since 2016. So this suggests that the growth rate of the company or REA Group is starting to slow down. Now, we can prove that by looking at the compound annual growth rate of all three, revenue and operating cash flow and market cap, over different periods. And that's what I've done on the top right there. So what I've done is the compound annual growth rate, which without a year there, is since 2003. And the company has grown revenue and operating cash flow at 15% per year. That's actually pretty good. That's the sort of growth rates you want to see for a company. Now, one of the things I want to compare that to is the growth rate in the market cap. And the growth rate in the market cap has been growing at 22.6% per year, which is suggesting that the market cap or the valuation of the company is growing at a quicker rate than the financials. And that's actually not something you want to see. You want to see the market cap actually growing at a similar rate to the financials, or even at a lower rate, because if it's growing at a lower rate, there is actually some valuation. There is some potential to be buying that company. Now, then, if you break it down into shorter time periods, so the compound annual growth rate over the past 10 years, it actually has been slowing down. You can see revenue and operating cash flow have been growing about 7% over the past 10 years, while the market cap has been growing at 14%. So the valuation of the company has been growing at twice of the rate of revenue and operating cash flow. Again, that's suggesting that REA Group is at the valuation is a little bit elevated than what it should be. And then over the last 5 years, it's even heightened enough. In fact, operating cash flow has only been growing at 0.6% per year, while revenue has been growing at 4% per year, while the market cap has still been growing at 11% per year. So I would be hard-pressed for someone to argue with me that the valuation of REA Group is not elevated right now, just based off these numbers. So what does this all mean for REA Group? Well, the share price of a company can increase through two mechanisms, and that is financial expansion. So that's when profit is increasing and the share price matches that increase in profit, or through multiple expansion. And multiple expansion is simply when shareholders or investors are willing to pay a little bit more of a premium to buy into a company. And the way to prove that a company's share price is increasing through multiple expansion is to look at the PE ratio and the price to sales ratio and any other ratio through time. And that's what I've done on this slide. I've looked at PE ratio, price to sales ratio, and my own little metric, EV over operating cash flow, through the last 20 years. And if you get a sloping, upward sloping from the bottom left to the top right in any of these charts, that shows that the company's share price is increasing through multiple expansion. So right now, the PE ratio for REA Group is around 150. 150 for a company that has been growing revenue over the past 4 years. That's expensive. If you go back about 5 or so, 6 years ago, the PE ratio for this company was hovering around between 20 and 40 for about 13 or 14 years. Then all of a sudden in 2018, it just shot up, went from 40 all the way to 150. That just shows you there is a bit of heightened valuation around REA Group. Same thing with price of sales. It's just been going up ever since 2000, and my own little metric, EV over operating cash flow, has been going up as well. So the main reason that REA Group share price has been increasing is through multiple expansion, and we can see that over the last 4 years or so, because revenue and operating cash flow have been largely just flat, but still we're seeing the share price increase. So in this slide, I'm just showing you the monthly chart for REA Group going all the way back to 2000. So if you've been a long-term holder of this company, you've done very well. Now, the interesting thing about this chart is over the past 5 years, so between 2016 and present, we haven't seen much growth with the financials of the company. So that should mean the chart of REA Group should be relatively flat. But we haven't seen that. We've seen the share price keep on growing. Now, someone would argue with me, and I would like to see an argument. Someone would argue with me that the market is forward-looking, and it's seeing that there's going to be quite a bit of growth in REA Group over the next few years. But if that is true, why in 2016 and 17 wasn't the market looking forward to the next few years and seeing no growth, and the share price should have been going flat? We had no flat period here. So you can just see keep on going up. So I think that sort of argument is not valid here. I think there's definitely potential for some growth in the future with REA Group, but I think the market is getting ahead of itself right now. And we've seen this in the past. I think it was Microsoft, where Microsoft share price went through significant multiple expansion. And over a decade or so, or maybe a shorter period than that, the share price did not move much at all because the financials of the company had to catch up to the share price. And then after it caught up to the share price, that's when the share price started to move up again. So this could happen to REA Group if the financials of the company don't improve. We could see a period where the share price just goes sideways for a long period. So who knows? I'm not a soothsayer. I don't know the future. But at this point in time, there's a lot of risk around holding REA Group. So I've decided to sell out. Now, in the back of my mind, even though I sold out, when I look at the daily chart over the past year, I go, this is a really healthy, solid-looking chart. It's in a good uptrend right now. In fact, I think it's at an all-time high in the share price, around $160. So I think someone could argue with me again that it was foolish selling out of REA Group when it's in a really healthy uptrend. And I would actually acknowledge that argument here. But in the end, I decided to sell out because I've been holding it for over 10 years, and I thought I'd just take my profits and deploy that money elsewhere where I think there's better opportunity to have some medium to long-term gains. So that's all on this video of why I sold out on REA Group. Now, did I make a mistake? Well, we'll have to wait and see. I'm not concerned about making mistakes, so I do believe that you should make as many mistakes as possible, because that's how you learn, and that's the most important thing about investing is learning, so you become a better and better investor. Now, I'm not a financial advisor, so just because I sold out of REA Group, and if you're an current REA Group shareholder. That doesn't mean you have to sell out. So if you do need some advice about your circumstances, make sure you seek out someone who is qualified. That's all for this video. Have a good day. Bye.